I'm glad to be here. Thanks very much, the Barry family, for the invitation. And I'll be speaking today about a metal called niobium. It's not common, but it is a metal. It is part of the periodic table. It's a very unique commodity. You'll see it. There is a limited number of producers in the world, and there's not a lot of project in the world. And I must say, I do have a lot of background surrounding that metal. So it's, I would like to keep your attention here. It's actually very interesting metals for you guys to know. All right, sorry. Presentation today will cover a quick introduction, company profile. We'll look at what niobium is, what's the market for niobium. So, and after that, we'll jump into our project. It's a James Bay niobium project. And we'll final topic, which is just going to be a one-pager on the other exploration assets that the company has. So NIOBAY, it's a junior exploration company. We're listed on the Toronto Stock Exchange, the venture, TSXV. Our ticker is NBY for niobium. Our current market capitalization is $12 million Canadian. We're having 37 million shares outstanding. And our focus, the company's focus, is to the development of the James Bay niobium project. Companies remain on the development of critical metals. In our case, it's the niobium. We do have some exploration assets in base metal and copper. Base metal and gold. They're located in Quebec also. So I'll have just the one page on these assets. So company profile, like I said earlier, market cap of $12 million. 37 million shares outstanding. Largest shareholders is actually 4 or 5 high network individual in Toronto who believe in the niobium project. We also have the Caisse de dépôt, which is the Quebec pension fund. They own roughly 7%, and management, we own another 7%. Quickly on the board of directors, what's you guys should pick up is Mr. Jacques Bonneau. Used to be CEO of a company called Mazarin, and Mazarin at one point in time owned 50% of the NIOBAY mine, which is one of the niobium producers. Also, we have another gentleman by the name of Jean-Sébastien David. He's actually very seasoned with relationship with the First Nation, environmental studies, and technical study. And our chairman he's an ex-hockey player, very famous back home. And the reason why he surged is our chairman is his father is a co-founder of the company in 1954. So let's jump into the niobium market. I'll try to make that quick. So what niobium does, where is it consumed? So niobium is a metal that we call microalloy. It is used in production of high-value steel. It's strengthened the steel. So I'll try to keep that simple. So it makes the steel stronger. So if you have a stronger steel, you can make the steel thinner. And if you make the steel thinner, you can have lighter car, for instance, in our case here. Also, niobium increase the toughness. You can use niobium in pipeline because of the strength. You'll be able to reduce the diameter of steel in the pipe, so you're going to consuming much less niobium. Much less steel. And also toughness is obviously if you're operating a pipeline in Siberia and there's an earthquake, you want to make sure that your steel remain intact. So niobium will bring those properties to the pipeline industry. And the largest segment in the steel demand is coming from the structural steel. We're talking about bridges, high rises. So a lot of infrastructure work will require steel containing niobium. Also, niobium is found in the MRI. MRI, it's basically a big magnet. The magnet is wire by niobium wire and titanium wire. So when you're entering to an MRI, you can think of niobium. I don't wish that to anyone, but it's a superconductor magnet. We also found niobium in all the turbines, the jets that you guys probably flew in, all the Airbus, the Pratt & Whitney, G's turbine contain niobium in it. Also, obviously, Mr. Elon Musk SpaceX thruster contain niobium. So there's new development surrounding the niobium, and there's two ones that I wanted to introduce to you. One, actually, is quite interesting. Is Toshiba recently announced that they developed a battery, a lithium battery, that instead of containing graphite as the anode, they're using niobium and titanium oxide. And the advantage of that battery compared to the other batteries is that the range give you a range around 300 kilometers, but what the trigger is with a 6-minute charge. So you can think of going to the gas station and you can go and charge your car for 6 minutes and you got 320 kilometers of range. So that's a battery that is currently under development by Toshiba. They're saying it's going to be market sometime next year. So that's could be a very positive output for niobium. Another very interesting development is niobium in the aluminum industry. When you're combining niobium with boron, it basically brings a similar property than it does with steel. So you're controlling the grain refinement, so it makes your aluminum stronger and lighter. So obviously there's a lot of value added there. It's still R&D works, but obviously that could potentially be a huge market also for niobium. On the demand side, over 85% of the niobium consumption come from the steel industry. So when you're looking at the steel industry, you're looking at China. In that chart, what that chart represents is the niobium intensity on your left right here. And on the bottom here, we're talking about the steel production. So China is producing roughly half of the steel on the planet, and they're consuming around 30 grams of niobium per every ton of steel they're producing. So that makes China the second largest niobium consumer in terms of volume. The largest one is the European Union with the CIS. But China is only consuming 30 grams, while North America is consuming 125 grams. So what that means is that the steel that has been produced in America or in Europe is a much greater quality than the steel that is produced in China. But what we've seen, and we're starting to see, is China is starting to use more and more niobium alloying, so they're focusing on producing much value-added steel. And as a result, niobium consumption is increasing. So just last year, China imported 25% more niobium than they did the year before. So that's huge. And that's going to continue to grow because China doesn't want to remain as known as a regular steel producer. They want to become a high-end steel producer. On the supply side, and that's another very interesting situation, is there's just 3 producers in the world, and they've been sharing the market for the last 40 years. Obviously, they know each other. I used to work for the Canadian producer here. It's the NIOBAY mine. The largest producer and the market, I will say, leader is a private company named CBMM. They're in Brazil. They have a huge resource with a huge grade. So they're by far the leader. They technically could supply 100% of the world for the next 400 years. But obviously the end user will not rely on a single source. So there has been two other producers that has been sharing the market. One is another Brazilian operation that used to be owned by by Anglo American. It's the Catalão mine. It's been in operation for another for over 40 years also. Catalão has recently been sold to the Chinese, China Moly, for $1.7 billion. I must say, in that price, there was also the phosphate asset that came along, but they paid 10 times the EBITDA. So what we're seeing here is that the Chinese are consuming more and more niobium. There's just 3 producers in the world. There's 2 in Brazil, 1 in Canada, and there's none in China. So what the Chinese are doing, they're buying. So they bought Catalão. The NIOBAY mine was up for sale in 2014, and the winner was a Toronto-based fund, but obviously the Chinese were lining up in the back. But Magris Resources purchased the NIOBAY mine for $500 million in 2015. Most of the financing came from Asia, from Hong Kong and from Singapore. So lots of Asian money going into the niobium space. So where that bring us in terms of our project? So we were lucky enough to acquire the James Bay niobium asset. James Bay is located in Canada, in the province of Ontario, by the James Bay. So that's why we named the company NIOBAY for niobium James Bay. We're located 40 kilometers south of a small village called Moosonee. To access Moosonee, you take the train or you fly in. There's power line along the railroad. The power is there, obviously, to feed the town, but also to feed De Beers diamond mine here called Victor Mines. And also south of us, there's the largest Canadian gold mine called Detour Gold. So we're 120 kilometers direct flight to Detour. It's an area where there's basically there's nothing around, so it's just some small trees. So there's no the closest home is on the village here, 40 kilometers north. And what's interesting with the James Bay project is all the work has been done in the 60s. And believe it or not, we discovered that through the internet. It was a company that did all the work. In the 60s, they drilled on the ore body 14,000 meters. That was enough to calculate a resource of 56 million ton at 0.52% NB205. I'll give you some comparison with the grade with the other producers so you have an idea what that means. The deposit is open at depth. And once they've discovered the resource, then they move into the feasibility. So they've sank an exploration shaft. They wanted to extract a bulk sample to be processed at the lab. So they've sent 225 metric tons to a lab called SGS Lakefield in Ontario. SGS run a pilot plant, we call, to validate the recovery. And high enough, they achieved a recovery rate of 78% in 1968-69. At that time, NIOBAY recovery were actually still on paper, but they were in the range of 54%. So amazingly high recovery rate, very, very low impurities. That's very important if you want to market a product. So we acquired the asset. We have access to all the technical documents that were available at the time from the feasibility study that was completed by Bechtel. All the dual core are still available. There's a core shack in Moosonee that everything is stored there. So if we were to redo all the work that was done in the 60s, we would have to invest over $25 million Canadian. So what we've done since we acquired the asset is that we wanted to validate the resource calculation. So the first thing we've done is we resample the equivalent of 12 drill holes that were representative of the ore body. We sent the assays to the lab, and the result came in line with the historical results. So that was number one. So at least we were confident that there was an niobium deposit there. And after that, we used the same sample, and we reran some metallurgical tests to validate the historical results. And fair enough, we ended up with initial result of over 80% recovery rate. Basically, we're very pleased with those results. It's going to require more work, but obviously we managed to validate the high recovery rate that was achieved in 60s. So what followed after that is we've completed a resource calculation, 4101 that we call on the resource. That was done by a third party called RPA out of Toronto. So now we have a resource estimate in our hands. The largest and the biggest challenge that we're facing now is the property is part of a traditional territory, and the First Nation band there's been a newly elected chief, and she's against resource development project. So we're striving to engage with them, with the chief. We have a lot of discussion with the community members there. The community the majority seems to be favorable of the project. They're signing petition for that the leadership could sit down with us. They want to learn about the project, but the chief always been resisting. So this is the hardest. This is our biggest challenge ahead of us. And once that challenge is going to be resolved, then we'll move forward with the development of the asset. So anyway, we're continuing to trying to engage with First Nation. In parallel to this, we're going to begin a preliminary economic assessment on the project. We have the technical report, so we can still move the project forward internally to have a PEA available. So we'll be able to evaluate what the OPEX, CAPEX, and what type of return that project could generate at the PE level, obviously. So this is the deposit on a 3D model. The calculation, resource calculation done by RPA. They have a total of 46 million ton of inferred indicated. The difference between the resource calculation done last year and the one in the 60s is the one in the 60s they use the concept of an open pit. In our case, we're looking at doing an underground operation to have the smallest footprint possible on site. We realize that we're in the middle of nowhere, but still we want to have the smallest footprint available and to have less impact to the environment. All right. So the result of that is we have to leave left a crown pillar. So there's 10 million ton of ore that will be as a crown pillar. So the result of this is a reduction of 10 million tons in our resource estimate. And the important thing to realize is it's been drilled no more than 275 meter. And it's all open at depth. So that's our 46 million ton ore body at 0.52% NB205. There's $6 billion US worth of niobium in that deposit. Now, and that's the most interesting slide. How do we compare to the actual producers? So what potential value that project could have on the company? So we have our project in the James Bay project, the company with a market cap of 9 million. CBMM are evaluated of over $40 billion company. Catalao was sold, like I said earlier, for $1.7 billion, including their phosphate asset. And NIOBAY, which are, I will say, our real benchmark, has a market cap of, not a market cap because they're private, but they've been bought for $500 million US. In terms of grade, NIOBAY is similar grade than ours. The recovery rate are on average 64%. For NIOBAY, we're at 78% based on the historical data. So for every ton of ore that we'll be processing, we'll be generating around 4 kilograms of niobium, while NIOBAY on average is producing 3.4 kilograms. So this is roughly 30% more, 25% more for every ton of ore that is processed. So we know the costs of NIOBAY are in the range of $22 a kilogram. The material sells for around $37, $38 a kilogram. NIOBAY is generating roughly, well, you got the figures here. It's around $75 to $85 million US per year of operating cash flow. So that's the highest producer in the niobium space. CBMM are generating over $1 billion of after-tax profit. So they are a very profitable business. And the key for us, we know that our costs should be similar to, not very far off from NIOBAY. Obviously, the studies will prove it. Because of our higher recovery rate. And what we know is that we don't want to upset the market. So our strategy there is to produce, we want to become the smallest producer of niobium in the world. And what that means is no more than 5% of the current on the world consumption. So 5% of the world consumption is roughly 4,000 tons of niobium. 4,000 tons of niobium is roughly 1 million tons of ore processed. 1 million tons of ore, when you have an ore body of 46 million tons, well, you can figure out that we're having roughly 25, 30 years, 35 years of a mine life on paper. So our objective is definitely not to go and drill again the deposit. We know it's there. There's no real need of increasing the resource. Obviously, we'll have to drill it to move the inferred into indicated, but we don't need to chase and increase the resource to justify the project. So we believe that the value of the company will definitely going to be subject to the First Nation. And once we'll be able to resolve the situation with the First Nation, we could expect some high valuation increased. So quickly also the other exploration assets. We have 3 main projects that are located in Quebec. One is La Pelletrie project. It's an option agreement that we have with Midland. We did some exploration last year on La Pelletrie. We had to invest some flow-through funds, so we decided to put the money there. It's a very, for the ones of you who have seen the Midland's presentation, you know how critical or how important the area is to Midland and to other companies next to the Detour gold mine. So that's a very interesting area. And we also have copper project in Quebec, northern Chibougamau, which used to be very close from an old mine there. There's also the Lake Short and l'Espérance project, which are south of Chibougamau, not very far from old gold mines there. So a very nice exploration package, but our focus now is towards the niobium asset. So we're considering maybe doing some spin-off of these assets into another company to eventually drill those assets, because they're worth spending some money on it. But the focus of the company is towards niobium. We also own a niobium tantalum asset in Quebec called Crevier. Crevier, we spent over $14 million on the asset.
Finish it because it's been 25 minutes now. So.
All right, I'm finishing it up. So Crevier right now, tantalum price are moving up, but the project is still not on on our priority because of the economics are still not high enough to justify the investment. So quickly, last slide, Eric. Why should you invest in NIOBAY? Obviously, we own, and we believe that we own the most valuable project in Canada. It's a resource that is known, and we're starting to de-risk it. The size of it is meaningful enough to justify the investment. We're starting to de-risk the technical aspect of the project. We do have a lot of expertise in the niobium space, which is key when you're looking at developing projects that require marketing. We have very low market capitalization, very tight share structure, and especially considering the James Bay asset. And once we'll be able to get in a room with the First Nation, we could certainly see a big appreciation of our market capitalization.
Merci, Claude.
Thank you.